What is up, YouTube? Welcome back to Stacks the Numbers, and we got some earnings coming out. And the first one on deck was Lululemon, LULU, listed here on the Nasdaq. Stock currently up almost 38 points, about 12.25% here on the day, hitting a high after hours of 349.31 at the moment. The company came out, they beat and also announced further share buybacks. So if we look here, post revenue of 2.21 billion, above estimates of 2.19 billion. Company approved $1 billion increase to its share repurchase program. Comp sales in Q1 increased 6%. And yeah, in my eyes, I kind of saw this one coming. Five Below is actually the shocker for me. But company shares down, rose more than 11%. $1 billion increase. Despite slackening shopper appetite in the United States, strong China demand, of course, has helped sales for the brand as customers look to refresh their wardrobes ahead of the summer season. Comp sales up. America's coming in flat compared to last year, 25% jump international business. Lower discounts and strong full price selling has boosted its gross margin, which increased 20 basis points to 57.7. We beat on revenue. 1.9 billion in cash. So Lulu, I had a feeling that one was going to pop up, especially again during these warmer months coming. We know that, they sell yoga pants and whatnot, so pretty popular. I said in my opinion, back to this moving average, maybe mid 340s, maybe around 350 was possible. We had the MACD cross, looked almost like a potential bull hammer here on the close for today's candle. But the RSI was low on both the daily and the weekly, right? So the stock was just kind of fighting to hold these greens throughout the day, and then ended up obviously coming out with good numbers, and that popped it. Now it's all the way up to here now. So it looks like it stopped again 349. What was it? 349.31. So we have to see now around this 350 resistance level if it could break through. But Lulu, congrats to actually, let's look on the weekly real quick. Yeah, so now we have a resistance level on the weekly 359.78, and we also have the 200-day moving average at 360.74. So the stock now may kind of hold this high 340s and potentially run throughout the morning and afternoon tomorrow off of the good news. So it may just consistently run up to 350 plus, and just kind of hang out between that 350 and 360 range possibly. We'll see what happens. Next company up was Five Below. I said, in my opinion, calls, right? Because people are struggling and, they're going to these cheaper stores. Five Below, again, FIVE on the NASDAQ. There's a retail store where everything is $5 or less. And apparently they actually missed on the EPS side and on the revenue side, and also cut the outlook for the year. That's not loading right now. Fiscal Q1 earnings decline. Revenue rises. Q2 outlook set. Shares plunge. As we see here, Q1 income 57 cents, down from 67 cents. Analysts were expecting about 63 cents. Net sales for the quarter rose to 811.9 million from 726.2 million a year earlier. Analysts were expecting over 830 million. So pretty decent rise in my opinion. Right? We're talking about, excuse me, roughly 90 million year over year. So percentage wise, pretty decent rise, but apparently analysts may have felt that, they would have generated even more foot traffic and just more customers overall. Because again, in my opinion, as we can see from the jump in revenue, they obviously did have more traffic and more buying coming in, right? So apparently it just didn't grow as much as analysts were. That's a pretty big jump though. That's a pretty big jump. That's what, like almost 15% or something. So see, this is what I mean. Similar to something like Fubo, right? Like the numbers are up, but not up as much as they really thought. But some of these analysts are looking for like 18%, 24% growth year over year. And I always say to you guys, talk to each other in the comments section, and talk to smaller mid-sized business owners and ask them if they're seeing 18, 24% year over year. It's much more growth than you would think. So I'm actually very surprised that a lot of these numbers are significantly higher here year over year. But hey, it is what it is. I'm just beating myself up and being stubborn because I said 5 calls, in my opinion. And of course, they completely shit the bed. Q2 earnings EPS of 57 to 69, net sales ranging from 830 to 850 million moving forward. Analysts were expecting $1 on sales of 884.5 million. So we're looking to miss this revenue number by, like 30 to 50 million. And the EPS, it looks like we're going to come in about 40% short moving forward here, Q2. So might have a rocky road ahead of them. But I am very surprised. For fiscal 24, the company lowered its EPS guidance to 497 to 537 from 571 to 622. That's a big drop. Decreased its net sales outlook to 379 billion to 387 from 397 billion to 407 billion. Analysts were expecting 599 and 4.03 billion. So yeah, we're off by about 5% on the revenue side, it looks like, moving forward here for fiscal 24. EPS guidance down big. EPS guidance is down big, 497 to 537 from 571 to 622. I mean, these are pretty wide ranges, so of course anything can happen, but doesn't look good for 5 right now. They're citing inflation. Steam discount trailer. Steam friend again. My apologies. I swear I always forget. My apologies. Citing weaker spending among lower income shoppers who've been hit harder by inflation. The company expects 3 to 5% drop in same store sales. Worse than its forecast in March. Said the company, quote, saw a positive comp sales from our higher income customers. However, the macro environment disproportionately impacted our core lower income customers, resulting in overall comp sale declines. I don't know. My mind isn't wrapping around this. But again, what I did, my initial prediction, and I said 5 below, I also mentioned other similar stores in the space, like Dollar General, Dollar Tree, and whatnot. So for all we know, that's where the traffic went. If it is truly significantly more rough out there for the average lower income consumer, then you might say, 5 below, Dollar General, probably not a big difference. But hey, at the end of the day, if something at 5 below is, $4.50, $5, you can get it at Dollar General for 3.25, right? I mean, this is what I mean. It's getting so rough out there that everyone's trying to pinch pennies where they are. And perhaps even with something as a $5 and below store, I may have overshot my expectations. So, it is what it is. But, you have to remember as well, if you're watching these videos, you have a couple of extra bucks to invest and trade, right? So you're able to take advantage of the stock market. We have to remember that I believe the number is like 60% of Americans have little or no net worth. You know what I'm saying? So this is why it's hard to read sometimes, because the people with money, spend it in ways we might not understand, and then you'll have, a company that might be overextended that can continue to beat. Or, you look at even a lot of these tech stocks, a lot of people don't realize as well. When you look at, like Apple or Samsung, think about how many well, now they're called influencers, but think about how many people are online, quote unquote, content creating, and they're just like giving away like, MacBooks and iPhones and Galaxy phones, whatever they're called, right? So it's funny because these people are actually fueling the growth and the sales of these companies. Even though, of course, for the average person, it's ridiculously expensive, right? Because we're looking at like a $1,200, $1,500 phone, people tack it onto their bill. Now their bill triples or whatever. You know what I'm saying? So, the way everyone is using their dollars right now in this moment, it is kind of hard to read, in my opinion, because we have a situation like 5 below that missed by a chunk, lowered guidance, it's down 16%. And then we have other companies like Apple that are somehow, consistently growing and beating. And it's it's difficult to read sometimes, while at the same time, if we think about, like the cruise line stocks that made a big growth comeback, a big rebound from their lows because people adopted this YOLO mentality and started taking cruises, right? So this is what I mean. I feel like, in my opinion, it's very, very difficult to see where the money is flowing because we're making an argument for cruise lines, but now we have a negative outlook on something like Five Below. But but Lululemon's doing okay. I don't know. It just seems a little difficult to read. And Five Below was overextended as well, just like Lulu. We had low RSIs, and today the stock was down 3.7% almost going into these earnings, and then the numbers came out light. So, very unfortunate situation for Five. It dropped down to, it broke 110. Okay, we're at 119. We go back to the weekly. This was 117. So we're below all of these resistance levels now. And our RSI, of course, is going to drop sub 30. Yep, we're below the bottom Bollinger Band there on that big drop, 117.60. Stock right now, 111.81. So this stock may drop to sub 100, and if we open here, we're technically at new 52-week lows here. 52-week lows, 128.64. Stock currently at about 112. Yeah, and that would bring us back to these lows here in June of 2022. Now, the last time the stock came down, it did kind of form like this W and then have that nice recovery throughout the tail end of 22 going into 23. So we may be entering a period now, again, if they lower the outlook moving forward. So we may have a situation now where we kind of like hang out here, you know what I mean? And then eventually run up, maybe like around election time, maybe like November, December going into the tail end. Because technically the growth was there, but just not what analysts were expecting. Next company up was Victoria's Secret. Steam friend again, my apologies. Victoria's Secret popped up, dropped down red, and now we're just basically flat here. Stock currently sitting at 22 3/4, up 14 cents, 0.6%. Was up about 1.1% here on the day, quarter of a point going into these earnings. Relatively flat, right? Going into these earnings, as you see throughout the entire day, relatively flat. And this is why when you release preliminary results and then, the stock got that big pop, that's what I said yesterday in my prediction video. I said that in my opinion, it may already be factored into the price of the stock, right? So if we look at the numbers, I believe they beat on the revenue side. So you may have had that initial positive reaction up to about 24, but I believe they missed on the EPS side, right? So then that drops them back down, and now we're just basically flat again. So in my opinion, I still say the company is going to struggle because I know they lowered that fiscal year number from like 6.3 billion or whatever it was down to 6 billion even. But Victoria's Secret adjusted operating income for Q2 expected in the range of 30 to 45 million. Forecasting Q2 net sales to decrease in low single-digit range compared to last year's Q2 net sales of 1.427 billion. Adjusted operating income for the year is expected to be, yes, 250 to 275, reaffirming full year outlook, forecasting net sales of about 6 billion, right? Or what? Down low, single digits compared to a comparative 52 weeks from fiscal year 23. Encouraged by the start to May. Caution around broader retail environment in North America. So it seems as if all of these retail stores now, all at the same time, whether the numbers this quarter were good or bad, they're forecasting a rocky road ahead for the next quarter or two, finishing out 2024. And I'm not exactly sure what to credit that to. I'm not sure if it's really the hyperinflation or if it's more of people are kind of just sitting on their hands, not buying anything. I don't know. It seems difficult to read, in my opinion. I'm just being honest. But Q1 revenue 1.36 billion versus estimates of 1.36 billion. Sees Q2 adjusted EPS 5 cents to what, 20 cents? Victoria's Secret post 12 cents versus estimates of 12 cents. So yeah, Victoria's Secret, I guess, basically like in line, and I know they're saying, oh, April was a good month for us. We saw a lot of traffic, blah, 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 right? And they released those preliminary results and the stock ran. Where did the stock run again? Yeah, stock ended up exploding from 17, no, where were we? Yeah, it got up to about 18, and then it jumped immediately up to like 23, it looks like. But again, it seems like that's factored into the price of the stock, and this may be viewed right now as fair value, which is why we didn't have much action today, even though we were above average volume today. Basically flat on the day, and basically flat after hours. But I don't know. I don't know. I have a feeling, because again, I feel like these companies, even like Lulu, but Lulu's been growing a little bit more nicely than Victoria's Secret. But, even like Lulu said, oh, a lot of buys came in, we're heading into the summer months. So some of these companies are more cyclical, right? So something like Victoria's Secret, you might see, I mean, it's summertime. Perhaps you can see some increase in sales, but I'm thinking maybe more around the holiday season. Usually is their best time of the year. Buy a little spicy something. I don't know. Honestly, it really does seem hard to read the retail space here because I feel like we have these random beats and we have these random misses on, and then it could be viewed as surprising depending on which company you're looking at. So it seems difficult to nail them down. But we know this, though, with earnings. We know earnings are a gamble, but the MACD was climbing nicely, so the stock is basically flat right now, so it's going to hold right there. Could possibly get up to maybe 24 and retest that top Bollinger Band. RSI was on the up and up on the daily. Weekly RSI middle of the road. MACD just crossed to the upside recently. The stock bounced off of the Bollinger Band this week and is technically still above the 50-day moving average. So it does look like we kind of retraced most of this big drop, though, right? Which is why, again, we could maybe see like the mid to high 24s or even 25, that psychological level, and then maybe have the rejection and start pulling back to the moving average. So we'll see how the street responds to this. But technically, they're still forecasting light numbers for the year, Victoria's Secret. And the last but not least was ChargePoint. And ChargePoint actually surprised. We were looking for a loss of 19 cents on revenue of 105.8 million. And they posted a loss of 17 cents. This time last year was a loss of 23 cents. Revenue in the quarter fell to 107 million from 130 a year earlier, but that was above expectations of high 105 millions. And the company expects next quarter revenue of 108 to 118 million. Analysts were expecting 122 million. So technically, nice slight beat here for ChargePoint, actually beating on that EPS loss, posting slightly more narrow loss than expected, and beat by a couple of bucks there on the revenue side. However, saying next quarter now, we're potentially going to miss and report light revenue. So, this is what I mean when we speak about the inconsistencies, right? Because if a company is inconsistent in the numbers, then the stock is going to be inconsistent as well, right? And you'll have these run-ups on some good news, but then it gives it back, right? And then we go into earnings, but now this quarter sucks, so now the stock goes down. And now we get excited for this quarter, and now these numbers are okay, so we'll go up a little bit. But then we'll start to give it back because in 3 months' time, we basically now have a pretty good blueprint saying that the company might miss probably on the revenue side and report light. So then we're going to go back down. Like, you know what I'm saying? So now you're in like this seesaw mode and you're not really gaining any traction. You're not gaining any momentum. And that's what we always talk about. especially when we look at the high growth tech stocks like Nvidia, right? The reason why it flies to the moon and it just consistently keeps going up is because it keeps splitting, it keeps beating estimates, it keeps increasing its outlook, it keeps, having good institutional buying, it gets bills passed for it, and consistently keeps splitting its stock, apparently, because it basically just keeps climbing and climbing no matter what. And then usually when they hit around like that $1,000 mark, that's when a split comes in. So they basically just keep growing and splitting, growing and splitting. But they technically are growing that company nicely and consistently coming in above everyone's expectations, and now basically supplying all of the other tech companies with their AI divisions. So that's why, obviously, it's kind of an anomaly in and of itself, as we know, because Nvidia could be viewed as massively overvalued. But at the end of the day, the point again is that consistency, right? And ChargePoint has been inconsistent, and we could maybe jump back up here to this fib, kind of where it was here, like the high 190, about 194, potentially $2. And then we may kind of see it come back down again like this. Another consolidating channel going into next quarter's earnings, which apparently are going to be a little light. And we'll look here on stock charts real quick. And we can see we're kind of flattening out. We're getting the tightening here of the Bollinger Bands. The MACD was steadily climbing. Stock right now down, just a couple of cents. Technically below that mid-Bollinger Band, though. That's on the weekly. RSI was 40. Let's check the daily real quick. RSI was middle of the road. Yeah, see, and we recently bounced off of this 50-day moving average that we spoke about. Had a rejection today off of the mid-Bollinger Band, closed right in the center, and now it's down 2 cents. So, in my opinion, they could maybe just kind of continue it, again, down in this little channel, and we could maybe see like 157, this bottom Bollinger Band, before we maybe have a bounce and try to reclaim that 50-day moving average. So, only time will tell, but yep, that's pretty much it. Those are the 4 stocks we looked at. If you jumped in any of these positions and called them correctly, then take a minute and brag to everybody in the comment section. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Have a good day, guys.